Has the business of Diamond Trust Bank, or DTB, improved enough to justify the higher share price? And I'm saying so because when you look at the share price of DTB, currently the share is going at 171.50 cents Kenya shillings at the Nairobi Security Exchange. And of course, looking at change across different time periods, over the past 1 day, the stock has increased by 7.9%. Of course, this is mainly driven by the financials, because the financials of DTB were actually released yesterday. The financials for first half of 2026, which of course were very interesting financials, as I'm also going to discuss in this video. And then over the past 5 days, the stock of DTB has increased by 11%. Over the past 1 month, the stock of DTB has increased by 17.5%. And then year to date, or simply put, so far this year, the year 2026, the stock of DTB is up 51.1%. And then over the past 1 year, the stock of DTB has increased by 97.1%. Simply put, the stock of DTB has almost doubled in price over the past 1 year. Is this a good thing? Should you buy? Should you hold? Should you sell? Or even so, what will be your ideal approach? Let's talk about all these nuances in this video. In case you are new here, my name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case these are kind of topics which you like, down there is a button called subscribe. Click the button for you to be able to subscribe to my channel so that you catch on these amazing videos I upload each and every day. And while you still at it, drop a like on this video. And as always, guys, in case you want to have one-on-one support when it comes to insights around investing, financials of companies, and Nairobi Securities Exchange, you can reach out to me directly. My WhatsApp number is down below. Reach out to me on WhatsApp. We'll plan to have an introductory call so that I'll be able to understand your investment goals, your investment journey, and then we'll be able to agree on how best I can be able to support you. And as always, down in the comment section, I've also put a link to some of additional resources for you, which are 2 books which are going to assist you level up when it comes to investing in the stock market. So go and grab those books for you to be able to level up. Having said that, what does DTB actually do? It is good for us to appreciate the business of Diamond Trust Bank and even so see how different it is from other banks in Kenya. So at the center of this business, basically put, the core businesses of DTB are retail banking, SME business banking, corporate banking, trade finance, asset finance, mortgage, digital banking, and bank assurance. And of course, DTB has regional presence. It is in Kenya, Uganda, and Tanzania. And by the way, a fact which you might not be aware of is that DTB actually began in Dar es Salaam in 1945. And then in 1946 is when it relocated to Kenya, Nairobi. And then as years progressed, sometime in 1970s, it was listed at the NSE. So DTB is a company which has been there for a while, okay? And it's really evolved over time to become a tier 1 bank in Kenya. And of course, it is very different. As you can see, it has a myriad of different core business interests, ranging from SMEs, business banking, trade financing, to even growing its digital footprint. So when you are out there and you want to invest in the DTB stock, what is DTB's investment thesis? Simply put, what are you going to be jumping on? The very first thing is strong earnings growth, because the earnings of DTB have been increasing over the recent years. And then the second thing is balance sheet growth. And I'm saying so because the balance sheet of DTB has also been doing very well on both the loans front, deposits front, and even assets front. And then the third thing you're going to be jumping onto is improving asset quality. And I'm saying so because DTB has been improving its non-performing loan ratio and also improving its provision for coverage on NPL. And then the fourth thing which you're going to be jumping onto is rapid customer and digital growth. And I'm saying so because The customer number on DTB end has been increasing exponentially. Right now, we are talking about DTB having almost 6 million customers. And for us to appreciate the business of DTB, let's now look at financials. Simply put, what are the numbers telling us when it comes to DTB's business? Looking at financials, DTB is doing pretty amazing. And I'm saying so, guys, because we're going to look at different matrices ranging from total assets, customer deposits, net loans, profit after tax, EPS. Starting with the total assets. Total assets of DTB have increased by 15% over the past 1 year. And I'm saying so because just looking at the number for 2024, total assets were 574 billion Kenya shillings. And then 2025, total assets increased to 659 billion Kenya shillings, a jump of 15%. Okay? And then when we look at customer deposits increased by 14% between 2024 and 2025. Because in 2024, customer deposits were 447 billion Kenya shillings. And then in 2025, customer deposits were 509 billion Kenya shillings, a jump of 14%. Then when we look at the net loans of DTB also increased by 14%, okay? Because in 2024, net loans were 285 billion Kenya shillings, and then they increased to 324 billion Kenya shillings in 2025. And then, when you look at profit after tax of DTB also jumped. It increased by 21% between 2024 and 2025. And I'm saying so because in 2024, profit after tax was 8.8 billion Kenya shillings, and then it increased to 10.7 billion Kenya shillings in 2025. And then when you look at EPS or earnings per share, EPS also jumped by 23% because in 2024, EPS was 27.3 Kenya shillings, and then in 2025, it was 33.65 Kenya shillings. That tells us that the balance sheet of DTB is expanding, right? Deposits are providing funding for loan growth, and then loans and deposits are growing at healthy rates. And of course, earnings are growing much faster than the balance sheet, which is also an amazing thing for any firm. And even beyond that, looking at the first half of 2026 momentum, DTB has continued improving across all these matrices. And I'm saying so because the H1 2026 numbers tell us pre-tax profit did jump by 37% year on year, okay? Revenue has increased by 21% year on year. Net interest income has increased by 26% year on year. Non-interest income has increased by 7% year on year. Operating costs have increased by 6%, which of course is reasonable. Loans have increased by 14%. Deposits have increased by 11%. And DTB's assets have increased by 10% year on year. This tells us that even beyond 2025 numbers, just the first half of 2026, DTB has continued its turnaround story and it is doing amazing. Now, let's dig a little bit more on profitability. How is DTB doing when it comes to different profit ratios, right? Looking at return on equity or ROE, DTB's return on equity is 10.3%, which of course is quite a decent return on equity, but then again, it is very low compared to other Tier 1 banks in Kenya. When we look at return on asset is 1.7%. Looking at EPS, as I mentioned, is 33 shillings and 65 cents. Then, when we look at cost to income is 50.2%, which basically means DTB is utilizing 50%, right, of the monies to be able to generate revenue, which of course is just at the bridge of what is ideal for the banking sector. And then, looking at the net interest income is 34.88 billion Kenya shillings. But then again, we need to appreciate that DTB's story is a turnaround or improvement story. 10.3 ROE is not extremely high for the banking sector, but then again, it is gotten at least a return on equity, and we hope in the subsequent years, this is going to continuously improve. Now, let's look at asset quality. Simply put, how is DTB faring on when it comes to loans and even so coverage? Looking at an NPL ratio, the NPL ratio for DTB did improve over the past 1 year. And I'm saying so because NPL ratio was 13%, and then 2025, NPL ratio was 11.6%. This tells us that non-performing loans have actually reduced at DTB. And the beautiful thing about this is that actually DTB's one is pretty low compared to other commercial banks. For example, KCB, Equity have a higher NPL ratio, right? So DTB is also trying to hold its place when it comes to having and even so working to reduce non-performing loans. And then when we look at coverage, specifically provision for coverage of NPL, it did improve because it increased from 40.7% to 56.6% in 2025. This simply says that DTB is aiming to have a higher coverage for non-performing loans, which is also a pretty amazing indicator. Of course, this direction is encouraging, but DTB credit quality is also something they need to improve on. And I'm saying so because the ideal NPL for the banking sector should be below 3%. So seeing the NPL is 11.6% is quite worrisome, but of course also we've seen the same trend within the banking sector, which is actually a reflection of how individuals and also businesses are faring on in the economy when it comes to honoring their debt obligation. Now, let's look at dividend. How is DTB faring on when it comes to dividend? The amazing thing is that over the past 3 years, DTB has consistently increased the dividend they are paying shareholders. And I'm saying so because in 2023, DTB's dividend per share was 6 shillings. In 2024, dividend per share was 7 shilling. And then in 2025, DTB's dividend per share was 9 shilling per share, which of course gives us a dividend yield of approximately 5.25%. And then the biggest potential when it comes now to DTB stock is dividends, earnings growth, and you as an investor potentially benefiting from share price appreciation or even capital gain in case you end up disposing your stocks. Now, having spoken about dividends, let's look at valuation. Is the valuation of DTB healthy, or even so, has the appreciation of the share so far this year reflecting all the possible increases which DTB could attract in the subsequent period? Starting with the PE ratio, or the price earning ratio. Looking at the numbers of 2025, right? EPS was 33 shillings and 65 cents. Price, we are talking about the current price being at 171.5 Kenya shillings. Just utilizing these two numbers, it tells us that the PE ratio is 5.1 times, whose interpretation is that it looks cheap, okay? And then looking at the next ratio, which is the PB ratio, the price to book ratio. Here is where we have an interesting nuance, which is worth noting. And I'm saying so because the share price is 171 shillings per share, okay? And then the estimated book value of DTB is about 90 shillings. That tells us that the PB ratio is 1.9 times. This simply tells us that the market values the bank at approximately almost twice its accounting value. Of course, that from the face of it might seem like the stock of DTB is expensive, but then again, also put in context, it basically tells us that the market has been allocating a premium to the DTB stock, and this is where we have an interesting question to figure out, right? This allocation of the premium, has it reached its end, or even so, are the fundamentals of DTB backing this continuous allocation? And I'm asking so because so far this year, the stock of DTB has almost doubled, okay? Now, when we put all these things in context, right? PE ratio, PB, and even return on equity, investors and the market is basically betting on DTB to continue doing well as a business, right? What could actually make the stock of DTB and the business continue faring well? Simply put, what are the growth catalysts? At number one, we have customer growth. As I've said, the customers of DTB have increased in recent years because currently the customers are almost 6 million customers. And then secondly, digital acquisition. And I'm saying so because 99% of new customers of DTB are acquired digitally. Number three is loan growth. As you've seen, just the first half of this year, loans of DTB have grown by 14%. Number four is SME and retail expansion. DTB has significant room to grow from its existing base. And then number 5 is digital lending. I'm saying so because 10 billion shillings in digital loans were issued in 6 months. And then at number 6, we have branch expansion. DTB targets to get to 100 branches in Kenya by the end of 2026, which is an amazing target. And then number 7 is asset quality improvement. Lower NPL could mean that DTB is actually improving its credit performance. And we've seen over the past 1 year, it did improve. So we hope that going forward, NPL ratio is going to continue reducing. And then, which risks is DTB exposed to as a bank and also as a unique business? At number 1 is share price risk. And I'm saying so because so far this year, the stock of DTB has almost doubled. That means investors have already bid on the stock to be up substantially. Has it reached its limit? And then the second risk is credit risk. I'm saying so because the NPL, despite the improvement, is still at 11.6%, which is extremely high, beyond the range for a good performing bank, which is typically 3%. And then number 3, we have the ROE risk. If ROE stays at 10%, right, and then the PB or the price to book ratio is still almost twice, then it becomes harder to justify why investors need to continuously invest in the stock of DTB. That's why ROE needs to increase substantially to at least make sense when it comes to the aggregate valuation of this particular stock. And then the fourth risk is competition. Let's face it, the banking sector in Kenya is very competitive. Tier 1 banks, also Tier 2 banks are really investing in technology and even so improving their businesses. And then at number 5, we have execution risk. I'm saying so because DTB needs to convert rapid customers and balance sheet growth into higher shareholders' returns. Simply put, we need to see an increase in ROE so that shareholders out there can experience growth in their value or even their investment. Having said that, what is my verdict on the stock of DTB? My verdict is going to be that this is the kind of stock which you hold or just watch and see how it's faring on before you get onto it. In case you already have the stock of DTB, the fundamental stories is improving, right? Different aspects around the numbers are improving. So that justifies you holding in case you already have the stock. But if you don't have the stock, this is the kind of stock which you have to watch and then accumulate on weaknesses. And I'm saying so because you don't need to chase the stock of DTB, given it's already risen by almost 100% so far over the past 12 months. Therefore, it is good to watch and see where it goes before you jump onto the stock of DTB. What do you think about this particular stock? What will you do? Will you buy? Will you sell? Will you continuously hold? What is going to be your verdict after you've heard everything I've shared with you? Comment in the comment section down below. Let's continue discussing. Cheers, guys, and you all stay safe.